Hello trading friends, and welcome back to Forex Focus, brought to you by IG. Taking a look at the recent run crude oil has had to the upside, as well as what it might mean for a US dollar. So much news to cover in the developing crude oil rally story that we've seen the last couple of weeks, but definitely resurface in recent trade. We'll cover those news items, why they are shaking up this crude oil market the way that they are, and also get to that effect on the US dollar. And we'll take a look at some historical price action in both these markets and see if there's an environment where both markets can perform in a bullish manner, or if this upside we're seeing in crude means downside for US dollar. But let's start with the price action in crude oil, as we're right now trading around those year-to-date highs, over $80 a barrel when looking at WTI crude oil. Now, of course, if you're looking at Brent crude oil, which is more of a European benchmark, that's going to be even higher, and we'll get to the reasons why in just a second. But even the WTI, which is more of a U.S. crude oil benchmark, above $80 a barrel, highest that it's been really since October, November of last year, coming off of that run all the way up above $90 a barrel. And you might remember that crude has been as high as well into the triple digits in recent years. We'll get to that in just a second. But this most recent run coming on the continuing Russian-Ukrainian war, news pieces that are coming out of its escalation and then de-escalation, and right now definitely on the more former escalating part of that cycle. And let's take a look at what this technically means for the crude oil market. As Russia, there you have the third largest oil producer across the world. And so when you have escalating tensions geopolitically in an area like Russia, and then also you might say, oh, well, Frank, Saudi Arabia and Iraq, they're not too far from the Israeli-Hamas war as well in the Middle East. You're starting to potentially affect the supply side of this commodity market. And if you've traded commodity markets before, you know that they can be very volatile, for one, and a lot of that volatility can come from the fact that, two, they're very supply-demand driven, and of course, every market is supply and demand driven. But when you're talking about Apple stock or the S&P 500 that has Apple stock and then 499 other stocks, you're talking about a pretty diversified market there, with a lot of different levers being pulled and just a lot of different sides of each of those businesses coming together to create a pretty diversified market. In crude oil, you're really talking about the supply and the demand for crude oil, for jet fuel, for machinery, for cars. It can very quickly be reduced down to, like I say, supply and demand in just a couple quick steps. Now, a couple of things to take with this is that you might, if you've seen a top 5 oil producers graphic like this in the last 5 to 10 years, especially more like 10 years ago, you might be surprised to see that now the U.S. is atop that list, and by a pretty wide margin, because working on the other side of that supply being negatively affected by war in Russia and Ukraine and in the Middle East is the flip side of that is in the U.S. and I believe also in Canada, but don't quote me on that. They've definitely started to output more oil, to produce more oil in the U.S. to kind of combat what has recently been some high crude oil prices owing to some of these geopolitical conflicts. And so there's push and pull on all of these, right? It's not as simple as, oh, okay, demand is unchanged and there's war going on in Russia and Ukraine, and so crude oil prices have to go higher. There's some angles to this supply story, although right now the main angle is, this Russian-Ukrainian tension escalating here in recent trade, and crude oil getting back above $80 dollars. Now, what does this mean for US dollar? Well, we crunched some numbers for you on the historical correlation front, and you could see a couple of things here. One, it's pretty consistently red over the last year or so of trading, which is to say that when crude oil is doing well, when it's you're seeing a bullish crude oil market, you tend to see a bearish US dollar market, and vice versa. Now, the other thing that is worth noting is that it was more red historically, and right now it's still negative correlation, but it's not as strong of a correlation. I would call this a relatively weak negative correlation between these two markets, and that just means that maybe there is a long-term trend of crude oil prices up, US dollar down, crude oil prices down, US dollar up, but it's not really that one for one. Whereas if you looked at a Microsoft and Apple stock and they have a positive maybe 0.7 or 0.8 correlation, this is just a theoretical example, then you might expect, if Apple's up $3, then Microsoft is very likely to be up. Whereas with this weak of a correlation, crude oil can be up $1 or $2, and US dollar doesn't necessarily have to be getting hammered, and vice versa for that example. But you do see the negative historical correlation, and you have seen in recent trade this US dollar come off of its recent highs a little bit as crude oil is seeing a little bit of a bid tone here in recent trade. We're looking at dollar CAD here reversing from the bullish run that we saw in US dollar over the course of the last week. And so you are seeing a little bit in the short term, crude oil prices getting back to their year-to-date highs, US dollar prices moving a little bit off of their recent highs. And we do have some historical cases as well for this relationship. Again, what you'll see is some pretty broad long-term examples of crude oil prices moving higher, US dollar prices being relatively lower, and then you see crude oil moving lower at the end of 2022, and US dollar moving to its some pretty historic highs at that time there at the end of 2022. Now, that being said, you do see plenty of occurrences here where US dollar and crude oil are moving in the same direction. And so again, it's a negative historical correlation between crude oil and US dollar, but it's not so strong or so strict as to necessitate they must be moving in the opposite direction. And that being said, the last time that crude oil hit triple digits and got to beyond $100 there in the middle part, the start and middle part of 2022, you can see US dollar, that red line, wasn't necessarily getting hammered. It wasn't even at its lows for the last couple of years, but you did see when crude oil prices came off their highs in the summer and fall of 2022, US dollar did see a nice lift at that time. And so a couple of things here just to wrap up. You've got this crude oil market that is trading near its year-to-date highs and has, in the last couple of years, shown potential to get to $90 or $100 and beyond. And you've got the negative historical correlation between crude oil prices and US dollar prices. But keep in mind that these are different asset classes, relatively weak correlations. And if you're, looking at, a second by second or minute by minute or even hour by hour basis of crude oil prices and US dollar prices side by side, they don't have to be moving in direct inverses all the time. There's even cases for, days and weeks and months of these markets moving in the same direction. So maybe a crude oil run to triple digits and beyond could be a little bearish for US dollar, but it's hard to tell given these weak historical correlations.